Hello dear students. So in this video we are going to discuss Accountancy Unit 1 Introduction to Accounting, first PUC, first unit in your accountancy. So let's not delay, let's get started. So firstly let us see what are the topics covered in this video. So firstly we will know what is accounting. Definition of accounting is explained. Then qualitative characteristics of accounting, branches of accounting, objectives of accounting. So now let's see in detail what does all this mean. Okay. So firstly, what is accounting? Before we start off with accountancy, we should know what is accounting. Why do we do accounting? Why is accounting important? So to know all these things, what we should do, we should know the meaning. So now there is one small definition which is given by the American Institute of Certified Accountants, which state that accounting is the art of recording. Accounting is the art. So firstly it is a skill. Accounting is one skill. Skill of what? Skill of recording. Recording all the transactions. So all the transactions, be it purchase, sale, or anything, whatever the transactions that the company does, everything to be recorded. So accounting is the art of what? Of recording. Recording all the transactions. And then classifying. Classifying means to classify it based on what? Based on type and nature of transaction. So we will classify it into purchase account, sales account. So different type of accounts will be opened up for each kind of transaction. So firstly we will record all the transaction, and then we will start classifying it based on its nature and type. So recording is done, classifying is also done. And what we will do? Summarizing. Summarizings, to summarize, to conclude. To conclude the account in a significant manner, in a understandable format, in a proper manner. So we will record the transaction, then we will classify the transaction, then we will summarize it in a significant manner and in terms of money. So the transaction should be in what terms? It should be in the monetary term. Transaction and events that are in part at least. So all the transaction and events should be in monetary format, or at least a part of it. So at least a 50 or 60% of the transaction should involve monetary terms in it. So part at least of financial character. So at least a half of it should be in financial character. So what we did, we recorded, classified and summarized only those transaction and events which are in terms of money. So this part is done, and then what we will do? Interpreting. So interpret, explain. Interpret, the meaning of interpret is to explain. So the main aim of accounting is to interpret the result. Interpret the result. Result is profit or loss. What is the main objective of starting a business or a company or any organization? Is to make profit. So at the last, what does the maker will want to know? So he or she should know if the business concern is making profit or is it in loss. If it is in loss, what are the changes to be done? So to know all this, what we should do? we should do accounting. So in simple terms, what is accounting? Accounting is recording, classifying, summarizing and interpreting. So these are the four main keywords which we should remember. What are they? Recording, classifying, summarizing and interpreting. So this is the meaning of accounting. So now let us move forward to the next topic, that is qualitative characteristics of accounting. So this is the chart which explains qualitative characteristics. Now let us see in detail what does each one character mean. Like the first characteristic of accounting is reliability. Reliable means the information available or provided in the financial statement should be trustworthy. So the main thing is the organization will rely on the information whatever is provided. So it must be trustworthy. See, reliability means the user must be able to depend. Rely means to depend on the information. So whatever the information is provided, it should be reliable. It must be trustworthy. The reliability of accounting information is determined by the degree of correspondence between what the information conveys about the transaction or events that have occurred. So, there is purchase of few raw materials. Think they have purchased 5 different raw materials and the entry has been made only for 4 raw materials which is purchased, and the accounts department has missed out one transaction, so they have not entered one transaction. So what will happen now? They will not have a track of that raw materials which is purchased. So for example, if it is purchased on credit basis, then they have to repay the amount. So if they do not have the track of the transaction, then repaying the same will become difficult. So the transaction to be recorded first. So what is the first important thing of accounting is to record. So all the transactions to be recorded. So there should be a correspondence between what information conveys about the transaction or event that have occurred, measured and displayed. So what do we do here? Everything to be recorded in a proper form. So whatever is occurred, measured, and we are going to display the same. So 5 different raw materials purchased, 5 entries to be made. So that is reliability. So if the organization is reliable on this accounting information for some decision making process, for their upcoming decisions, so all these things to be in a proper format. So and each and every transaction has to be recorded with utmost care. So first point is reliability, means to depend on whatever information is available in the financial statement. So next one is relevance. Relevance means to be relevant. Relevant meaning closely connected to what is being done or what is considered. So whatever the transaction is done, it should be relevant to whatever the information is available in time. So relevant, it should be the same. So whatever the transaction has occurred and the information whatever is available must be in perception and feedback and must influence the decisions of the user. So again, all these accounting information is required for decision making process. So for this decision making process, it should be relevant. So it should be connected with whatever is being done, and whatever is considered should be the same. So whatever the financial statement shows and whatever the transaction has occurred, it should be the same. So it will help the decision maker in prediction about the prediction. So now they can predict about the outcome of past, present, or future events. So they would have predicted that this product will give us 70 to 80% of profit. But according to the information, whatever is available in the financial statement, and from that, they will come to know what is the outcome. So they will know that, okay, so last year we thought that this product will give us 70 to 80% of profit, whereas it gave us only the profit of 40 to 50%. So they will think of what is the present situation, and they will take decisions for their future events based on this accounting information, whatever is available. So if a product, to manufacture a product, it will cost around 100 rupees, and they thought it will be giving a profit of 70 rupees. So where the product will be sold for rupees 170. But due to some circumstances, they have sold it for 140, 150 rupees. So now they have to think in what way we can increase the profit for the upcoming years. So how will they come to know? They will come to know only when the information available in the financial statement is relevant to what is purchased, at what price it was purchased, and at what price we are selling it, so that they can make decision for their future events or upcoming events. And one more thing, confirming or correcting their past evaluation. So confirming, so or else they would have thought the company, this product would give 170 rupees of profit, and yeah, that particular product was sold for rupees 170 only. So now they will know that, okay, the decision what was taken was right. So they will get an confirmation, that okay, that whatever the decision we are taking is going in a proper way. So we can continue taking decisions in the same format, or correcting their past evaluations. So, or they will learn and lesson in simple terms that, okay, whatever the decision taken earlier was not that better for the organization. So, we should think of something else, and then we should plan out and then decide what works for our organization. So this is relevance. And next characteristic is understandability. Understandability means decision makers must interpret accounting information in the same sense as it is prepared and conveyed to them. Understand. So the word says understand means to know, to understand what the other person is trying to tell us. So here understandability should be between the accounting department and the decision makers. So understandability means decision makers, the high-end authorities must interpret the accounting information. So interpret means whatever the accounts department, the accountants have explained, whatever the information is explained by the accountants. Interpret means to explain. So the decision makers should understand the explanation, whatever is given by the accounting team, in the same sense as it is prepared and conveyed to them. So recording, classifying, summarizing, and then accountants will interpret this. So now this decision makers should understand whatever is conveyed to them in the same sense, in the same manner as it is prepared and conveyed. So all these procedures, whatever is followed and whatever is the final outcome of the financial statement, the decision makers also should understand it in the same sense as the accounting department is trying to convey. So, a message is said to be effectively communicated when it is interpreted by the receiver of the message in the same sense in which the sender has sent. So, you are sending one message in a WhatsApp. Think you are texting one of your friend, and this message is said to be effectively communicated. So, effectively means it should be effective enough only when the receiver of the message receives that message in the same sense in which the sender has sent. So, whatever you are trying to convey, and the receiver also will understand it in the same sense. So, only then the accounting financial statement will work. Whatever is conveyed and received to be in same sense. So, this is understandability. So, next it is comparability. So, comparability, they should be able to compare the accounting information, compare it. So, it is not sufficient that the financial information is relevant and reliable at a particular time, in a particular circumstance, or for a particular reporting entity, but it is equally important that the users of the general purpose financial reports are able to compare various aspects of entity over different time period and with other entities. So it's a long explanation. So the thing is, compare, they have to compare the financial reports. So what does it mean? If the financial information is relevant and reliable, only that is not enough. At the same time, the financial report should be, we should be able to compare it with various aspects of an entity over different time period and with other entities. So same product is being manufactured by different entities with different names. So now the organization will compare its product with the product of some other company. So along with all this being relevant, reliable and understandability, the accounting information should also be in such a way that they can compare it with various aspects of an entity and with other entities as well. So comparing it with one organization to the other organization. So this is comparability. So now let us move on to the next topic, that is branches of accounting. So in accounting we mainly have three branches, which is financial accounting, cost accounting and management accounting. So now let us see what is financial accounting. Financial accounting, the purpose of this branch of accounting is to keep a record of all financial transactions. So recording, the main, the first purpose of accounting is recording, isn't it? So this financial accounting will record all the financial transactions, financial transactions information required by the management and other interested parties can be provided. So information required by the management. So whatever the information is required for the management and other interested parties are external shareholders who has purchased the shares of the company. Even they will be interested in knowing what is the financial position of the company. Is it making loss or profit? So what will this financial accounting do? The main purpose here is to record all the financial transactions and information required by the management. Whatever the information is required for the management, mainly for decision making process, this financial accounting will provide all the information to the management and other interested parties, that is external shareholders. So financial accounting means recording of financial transaction. What is financial accounting? Financial accounting means recording of financial transactions. So now next one is cost accounting. So what is the main purpose of cost accounting? Is to analyze the expenditure so as to ascertain the cost of various products manufactured by the firm and fix the price. So cost means, as the word says, cost means the price. So what will this cost accounting do? This branch of accounting will analyze the expenditure. So what is the expenditure for producing each unit, so as to ascertain the cost of various products manufactured by the firm and fix the price. So before a product is out for the public, they should fix a price for it. So what happens here? What basically cost accountants do? So for example, it's again a soap manufacturing company. So they will need different raw materials and machineries involved in it. Manpower is involved, electricity is involved. So what does cost accountants do? So a bulk of raw materials is purchased, manpower is used, power is used, everything is fine. Electricity power is used. So what they do? They will calculate it for each unit. So for one soap, how much of raw material is used, how much of manpower is used, how much of electricity is used. So all these things, they do it for each unit. So what will happen? It will become easy for the firm to fix the price of the product. And it also helps in controlling the costs and providing necessary costing information to the management for decision making. Again, cost accounting also will help the management for decision making process. Okay, it also helps in controlling the cost and providing necessary costing information. So wherever they can control the outflow of cost, so if there is any other possible way where they can reduce the cost for each unit, so cost accounting will also help the management in this way. It will help in controlling the cost and providing necessary costing information to the management, again for what? For decision making. So what are the decisions to be made for the upcoming years? So again, the cost accounting also will help in decision making process. And the next one is management accounting. So management accounting, the purpose is to assist the management in taking rational policy decisions. So what will it do? It will help the management again. Again, it will help them in decision making process itself, but taking rational policy decision. So rational policy decision means what? It is a process in which decision makers go through a set of steps and processes. So what will they do here? So they will adopt few steps and few process, and they will choose which is the best solution to the problem. So all this financial accounting and cost accounting has given all their information. Now it is time for the management to take right decision. So they will take decision based on a rational policy where they follow few steps and procedures, and then they will choose the right solution for the problem, or they will be able to take the right decisions for their upcoming events and to evaluate the impact of its decision and action. So they will also evaluate, okay, so if they think of introducing a new product, now they will evaluate it. Is it worthy? Will it work? Is it going to be profitable or not? So all these things they will evaluate for what their decision and action, whatever the decision and action they are going to take, they will evaluate it. So these are the basics of accounting. So next topic is objectives of accounting. So this is the last topic for this video. So let us see what are the objectives of accounting now. So the main objective is to maintenance of records of business transaction. Accounting. So let us see. Accounting is used for maintenance of systematic record of all financial transaction in book of accounts. So what is the main objective of accounting? To record all the financial transaction. Again, it comes to the first point, that is recording. So if you remember the definition, you will be able to write the objectives also. So the first thing is to record all the financial transaction. So why we should record all this financial transaction is, so one company will manufacture many products and will buy many raw materials for those products. So to keep the track of all these things, what we should do, we should record it somewhere. So if you want to read something, like if your exams are nearing, what will you do? You will put up a timetable for yourself. It is a kind of record which will remind you at what time what you're supposed to do. So in the same way, accounting will also first record all the financial transaction so that we will know what is happening in the organization. See, even the most brilliant executive or manager cannot accurately remember the numerous amount of varied transactions. So, as I said, a company can purchase many raw materials, they will do sales of products. So, all these things they can't remember it. So, if they want to have a track of it, they should note down it. So, all these things should be recorded. So such as purchase, sales, receipts, payments, etc. That takes place in business every day. Every day they do purchase, every day sales is happening. So every day we will do some or the other payment for some products, receipts are being generated. So to keep a track of all these things, accounting will maintain a record of business transaction, all the transaction that is happening in the business every day it will be recorded. Next one, calculation of profit or loss. So this point itself explains the objective. So why do a person starts business? To earn profit. So he or she must know if the company or a business entity is making profit or loss. So the another main objective is to calculate profit or loss. The owners of the business are keen to have an idea about the net results of their business operations periodically. That is, whether the business has earned profit or incurred loss. So, based on this profit and loss statement, they will be able to take their decisions for the upcoming events. So, profit and loss. The first thing is we will record. What is the first objective? To record it. After recording it, what we will come to know? We will come to know if it is making profit or loss. Simple. And next objective is deception of financial position. Accounting also aims at ascertaining the financial position of business concern in the form of its assets and liabilities at the end of every accounting period. Okay, so before we get into this explanation, let us know what is deception. Depiction. Depiction means to portray or represent anything. Depiction is nothing but to portray or to represent anything. Here, accounting will represent the financial position of an entity or business concern. So, what is depiction? Depiction means to portray or represent. So, what does accounting will portray? It will portray the financial position of the business concern, isn't it? So, accounting also aims at ascertaining, so again, representing the financial position. What is the financial position of the organization? Is it making high profits or is it incurring loss? Or is it in a break-even point where there is no loss, no profit? So all these things we will come to know from accounting of the business concern in form of its assets and liabilities. So if assets are more, it is good. If liabilities are more, then the company should think of the way where it can reduce its liabilities. So when will this come to know? This will be done at the end of every accounting period. So at the end of every accounting year, the financial position of the organization will be known. And the last objective is providing accounting information to its users. So who are the users? Decision makers and shareholders. So what will it do? Accounting will provide accounting information. The accounting information generated by the accounting process. So whatever the accounting information at last means again profit. It can be profit or loss. That is the final information what accounting is going to give. So that accounting information is generated by the accounting process. So process of what? Recording, classifying, summarizing and interpreting. Again, it comes to there only. Is communicated in form of reports, statements, graphs and charts to the users who need it in different decision situations. So again, the accounting information is required for decision making process. So in whichever format it is required, if they want it in the form of report, they will give it in the form of report. If they want statements, it will be given in statement, graph or charts. So accounting information will be provided to the users in any of the format they want it. For what? For the decision making process. Okay, so that's all for today. So we will be continuing with the unit 1 in our next video.